is important. Okay, we're off. Welcome, those of you listening to the recording, to the working sessions, intermediate, advanced session. Here are the disclaimers, and here is, let's go to the platform. Oops, not that. That is important, but not yet. Okay, what makes it? We said what makes a strong stock? That's the first thing. The trend, the sector. Those are the two most important things for us. We look at liquidity, right? We look at liquidity as measured by volume, our ability to get in and out as efficiently as possible, penny spreads, right? We don't pay commissions for the most part. We do for options, but it's much lower than it's ever been. But we still have to be mindful of spreads. With stocks, not terribly so. If options, it's got to be a mandatory requirement. There's really only about maybe 300 to 400 stocks with options that I would be willing to trade. There's probably 3,500 stocks that have options in existence, which means 90% of them are garbage. They're illiquid. That means that the volume in the open interest is so light that most likely there's only one market maker. And he's not a good market maker. He goes off into the shadows and trades where unsuspecting, unknowing traders stumble in. Right? The analogy I give when you trade those options, it's like, you'll see like a 40-cent spread. And you're like, oh, I'll see if I can cut it in half. And he'll be like, yeah, for sure I'll cut that in half. Come on in. Come on into my option party. And you walk in that door and you hear the door lock behind you. And you're like, oh, what have I done? Yeah, you should be. You should be nervous. It'll give you a little something. When it's time to get out, you get nothing. No breaks for you. The pricing goes from bad to worse, and your losses just get absolutely much bigger. So what do? We avoid it altogether. If it's not liquid, we don't trade it for options. So that's what we think of with quality. Your job is not to be a stock picker, meaning like you're not trying to find a needle in a haystack, right? If you look at sectors, you'll find that for any given representation, as referenced by like an industry group, there's probably 2 or 3 stocks that would be tradable. And you're just trying to find the best 1 or 2 to put on your list, and you say those are my horses. Those are the strongest trending, most liquid stocks from that group within the sectors that I have identified as having momentum. Technology, communication services. We've had a chock full watch list of those for some time because they're constantly leading. Now what? Now we're seeing financials and consumer discretionary and industrials. And so what are we going to do? We're going to buff up the watch list, finding the best of those and putting them on the list so that when they pull back, we buy them. Find a bull market, buy the dips. That's our basic core bounce trade philosophy. So we find a bull market. Here's a bull market. And every time it dips, we look to find trades. Whoops. You can see this setting up over and over all the way along. Back here, we didn't have a trend. It was going sideways. Back here, we did. That's it. That's all we're looking to do. Hopefully that makes sense. Is there a list of the stronger options? Yeah. So what Sandy put up, let me show you that. And we actually have, let me run this for you. If you come into, let me move my Discord over. If you come into the resources and you come here to FinViz bullish search parameters and you click this link right here, bing. Oh, it ruined my reveal. It opened it on the wrong tab. Here it is. What has it given me? This is a basic search that is built over $10 per share, over 2 million shares traded per day, optionable and shortable, above the 50-day moving average, above the 200-day moving average. This is actually also a bullish validator. Right now I have 441. Sandy, who's been in the group for a while, can attest that back in September and October, when our market posture diminished and it got down near and actually crossed to below zero just for a fraction. But even when it was diminished, when you run this search, you'd maybe get 100, less than 100. So if you're like, I'm really bullish, and you run a bullish search and you can't find anything, you need to reevaluate your premise, right? That's what I mean when I say this is a bullish validator. I say, hey, I'm bullish, and I have been for months. Well, I would expect to find a lot of bullish stocks. 400, 440. That's way too many for us. So now what? Now this is, you can see our working session just morphs into, how would I search to build out my watch list? Well, we have this fundamental starting point. What do I want to do now? Well, we said we're feeling pretty good about technology and communication services, but maybe financials, and financials is okay. We have some good ones in there. Industrials, I don't feel great about. Consumer discretionary, I don't feel great about. I would love to have more. Great. What do? Now, I said consumer discretionary. This says consumer defensive and cyclical. And you're like, well, Scott, there's no consumer discretionary. So consumer discretionary and consumer cyclical will be used interchangeably. Consumer defensive and consumer staples will also be used interchangeably. So we want the cyclicals. And now my 440 has been whittled down to 39. You'll notice this is pre-sorted to show me the strongest stocks first. You'll be like, God, look at these stocks. They're amazing. Well, they are intended to show the best stocks first. But yeah, I mean, look at this. Carvana has just, this thing was on the brink of bankruptcy. They have one of these just off the freeway near my house, and it was empty. The vending machine was empty. And now look at this thing roaring back. Yes, looks fantastic. This is where I'm going to come to find some new stocks. But 39 is still a lot. How do I whittle it down further? So the next thing I can do is move to the next step over industry. What industry? This I want to see consumer cyclical broken down one step further. Remember, this is what I mean when I say top-down analysis. What did we do first? We started with the market every Sunday. The market's good. Great. Then you need to go to each of the best sectors. And from within each of those best sectors, we want to go one group at a time to find the best stock, best in breed. Well, you have working dogs, and you have, I don't know all the, but within working dogs, there's different types of breeds, right? So we have the broader set, and then we have the subset. And within the subset, we say, who's best of that? It's doing it again. My drawing tool freezes up on me. I don't know why it does that. Just give me a second here. And, it's freezing the whole thing here. Come on now. There we go. I love that drawing tool, but every now and again it freezes on me. Okay, so now if you look, these are the subgroups right here. Consumer discretionary is broken down into apparel manufacturing, apparel retail, auto manufacturers, auto parts, auto dealership, right? All of these subsets. So we can just go one at a time. Okay, there's no apparel manufacturers. That's easy enough. How about retailers? We've got a few to think about. TJ Maxx, Foot Locker, Ross Stores, and The Gap. Foot Locker doesn't look that great to me, but that TJ Maxx looks pretty strong. Ross Stores looks pretty strong. I don't love the volatility of The Gap. I would say, if anything, I would take one of these two. Now, this one here is a $50 billion company. This one here is $130 billion. I kind of like this chart better. It has going to have more trading volume and therefore likely more options. That's my winner. Boom. I just got one new stock to add to our list. So tomorrow when we go through the list, People will be like, we added this. Only you guys know exactly where it came from. Then we do the next one. Okay. Now we go to auto manufacturers. Obviously, Tesla's moving well, but so's General Motors. So's Ford. And so's Rivian. So if Tesla's too much, you might put Rivian if you like an EV maker. All right, I want to go to the group. Let me move this back over. Let me go back to where the chat is. Okay. Okay. Vote it. GM or Ford? Vote it. What do you guys think? Who gets added to our list? You guys get to decide which one. You're giving me the fodder for trade alerts. I've got Dan with Ford, David with GM. I might have to put both. Okay, do we want both so we have a good old-fashioned race? There's been plenty of times we've had John Deere and Caterpillar, right? Good old-fashioned, and we'll go back and forth between them. GM is too choppy. Oh, I don't know, but the choppy is in an upward trend. I don't mind choppiness when it's going higher. I'm going to do both. I want both. Here's the question then. Do we take an EV? I'm going to put Ford and I'm going to put General Motors. Do we put an EV? I just kind of... Phil says Ford, he owns two of them. Sandy says Ford as well. Do we put an EV? And if we do, is it Ford or is it Tesla or Rivian? Rivian does have pretty good options. Not as good as Tesla, obviously, but they're decent options. I don't know. Tesla's a cult stock for sure, and it's definitely pulling back right now. It's giving a bit of a cup and handle. So if it breaks that handle, maybe there's something there. All right, let's keep going. I'm having fun. This is great. We needed to do this. We should do this for more than one sector if we can. I want my watch list to be a little bit more fleshed out. Dealerships, nothing. Dealerships, Carvana, CarMax. CarMax just looks choppy, but Carvana's got some strength. Let's add it. Let's put it on the list. Carvana. You want to trade more? Put more stocks on your list and you'll have more potential opportunities turning into trades. That's the equation. As long as those trades meet your rules in a bull market, there's an old saying, everybody's a genius in a bull market. That sounds fun. Let's do it. I'm in. Department stores. Oh, who do we have? Nordstrom's. I don't know. That's not for me. If you like it, put it on yours. That's not for me. Footwear. On holding. That's kind of interesting right there. And it's really kind of showing a signal. I don't like looking for trades. I like looking for stocks to put on my watch list, then trading stocks from my watch list. I would actually say that this one was in a consolidation and it has now broken this consolidation. And when this is done, if it pulls back and holds up, we would have a trade. I don't want to clutter the watch list yet. I'm going to hold off on that. Again, if you like it, feel free. Furnishings, fixtures, nothing there. Gambling. Oh, okay. Nothing there. Home improvement. Home Depot and Lowe's. It's the same stock. Home Depot is bigger than Lowe's. So from a liquidity standpoint, I like them better. You know what? It broke out. Let's put it on the list. Home Depot. If it pulls back, we have a trade. Let's go to internet retail. We've got some Chinese stocks in here. Alibaba. And, this is German. Jumia Technology. Look at that thing. Made a huge run up. It's a very inexpensive stock, but it's definitely picking up. Amazon's already on our list. We don't have eBay. Maple Bear? I don't know what that is. Alibaba we've looked at before, but it doesn't look great right now. I don't know. I don't think this would have the right options. I think they'd be really illiquid, and I think we have what we want, which is Amazon. Chewy kind of looks a little funky right now. No reason to settle, right? Lodging. Ooh, no hotels. Luxury goods. Tapestry Inc. Not for me. Packaging and containers. GPK. Smurfit Restaurant. I don't know what that is. IP International Paper. Man, these are kind of iffy. This group is iffy. Personal services, nothing. Recreational vehicles. Maybe Winnebago, but no. That's what likely shows up. We have the home builder ETF, but you can see that both DHI and Lennar look exactly like the ETF. You don't need all of them, whichever gives you the most liquidity. But you also won't trade more than one of these at a time. They look exactly the same. Resorts and casinos. MGM Grand. It broke out, but it's really kind of sideways overall. Nothing outstanding there. Restaurants. Ooh, who do we have? Dutch Brothers. Coffee looks pretty good. Cava Group Inc. Nah, neither of those for me. Like I said, we don't need. We're just looking if anything looks really special, especially tradable. WSM, Williams Sonoma, kind of sideways. Bed Bath or Best Buy. GameStop, the meme stock. No interest for me. Textile manufacturing. Nothing there. Travel services. Nope, I don't need an upgrade. Oh, the cruise lines. Look at Royal Caribbean. Norwegian. So Carnival and Norwegian are playing catch up. Royal Caribbean has the best trend right now. These guys are where these guys were back here. So either this one's overextended and these are going to play catch up. I don't know. What do we think? Let's put Carnival. Let's put Carnival for the catch up. One cruise line on the list. And you might be thinking, but this one's already going. Yeah, but I'm feeling like it maybe is getting a little overextended. There's Airbnb. Nothing there. And that's it. We just went through the entire communication or the entire consumer discretionary sector. We added a good number. We found that we already had some, and now I think we have a good representation of the strongest stocks in the sector across multiple industry groups. Right? Does that make sense? That's what I want my watch list to be full of. The more of those we have, the more opportunities that when they pull back in their uptrends and give us setup opportunities, we can start making trades and decide which ones, how many, how much risk, etc. That was fun. I want to do it again. Do it again. Let's do our other preferred. Yes, any of these, if you want to see them better, I just add them to my watch list. But if you click it actually just once, it will pull you here. And here you'll see a bigger chart. You'll see all of this fundamental data. If it's interesting to you, you can actually go see like current analyst ratings if that's interesting to you and when they came out. I mean, obviously, you can see that the three most recent this year are downgrades. While the stock is going up. So I don't know how much faith I would put in these. They're downgrading it to 175 to 145 as it's, I don't know. Anyways, I would be careful looking at that personally. I just want to put it on my watch list, but it's there if you would like it. All right, let's go to industrials. Now, again, industrials, right off the bat, we have 27. I could probably go through and look at this. Takes 3 pages. That's not what I want, though. I don't need to do that. It's too easy for me to isolate into these subgroupings and just simply be like, great, who's here from aerospace and defense? Which do I like the best? I've got Spirit Aerosystems. I've got GE Aerospace. That was where the curse was. It's too soon, GE. HWM, Howmet Aerospace. I think that one looks the best if we wanted one. I don't know. Do we want an aerospace stock? Is that super interesting? It did set up, didn't it? And that's the hard thing, David, is I don't necessarily like to pull the trigger on the setup. I like to see it, watch it, see how it feels. Let's put it on the list. HWM. How's this? If you're paper trading, it's an ideal candidate. Right? Worth putting on and getting experience. I would say that. Sorry, making you dizzy with my mouse movements. Airlines. Southwest or no one, and I say no one. Oops, I skipped one. Airports and air services, nothing. I didn't skip one. Building products. BLDR, that's an old favorite. That's an old favorite that just broke its consolidation. Oh, an old friend. Look at the last time it broke its consolidation and gave a higher low. It started this move. So do I think I want that? Yes, I do. Put it on the list. JC, Johnson Controls, that's a maybe. I love it, David. Great one. Great call out. Where did you find it, out of curiosity? BLDR. If you tell me you did this exact process before we did it together, we can be new best friends. We can be new best friends either way. Okay, let's go. Business equipment. Nope, nothing for us. Conglomerates. Honeywell and 3M already on our list. I don't think there's any reason to add Honeywell. That doesn't look astounding. Consulting services, nothing there for us. Electrical equipment. I don't know. You could make an argument that there's some momentum there. This thing's gone from 6 to 18 in a matter of 2 months. If it continues, there may be something, but that looks like a shark frenzy to me. If that sounds enticing to you. Farm and heavy machinery equipment. No, nothing really there. Yeah, there's a lot here, right? The list is full. The list is getting better. It's a living, breathing list. That's part of what we're trying to do here is curate this watch list. Now I'm going to have to go update the watch list. So I need to add that to my list of items. Update watch lists. Where do you find this watch list? You want to know to make it easy. Also in your trading resources. So we still have time. Let's finish. We're going to finish 2 sectors. Love it. I do want to talk about financials before we... In fact, you know what? I'm going to give us an assignment. Oh, look at Fastenal's breakout. Look at that breakout. Again, the last time it broke out and then pulled back, the last time it's doing what we're looking for is right there. It broke that consolidation, then pulled back, and then it launched that. Consolidation, break, pull back. What are we looking for? Not that weird line, but that next trend. So Fastenal is now on. Did I add it? I did not. Let me add Fastenal to the list. That's an old friend as well. That's been on the list before. And when it starts to get into the funk, we kick it off the list. Yeah, what have you done for me lately? That's the question we ask our watch list on a regular basis. That's the question. Nothing in infrastructure. Freight? No. Marine shipping? Okay, not there. Metal fabrication? Pollution and treatment? Nope. Railroads? Ooh. Okay, we have breakouts in the railroads. CSX, that's a 70 billion railroad. Union Pacific, that's 148 billion. Canadian Pacific, Kansas City. Okay, where are you from? That's just confusing all of us. Canadian Pacific, Kansas City Limited, San Francisco, France. I mean, what are we doing here? Too much. You're off the list. I'm picking between UNP and CSX. I like the liquidity in UNP, but I think the potential is here, right? I like the potential in CSX. I'm going CSX. You could add both if you were interested in another contest, but I think I have my horse. Let me know your thoughts. Railroads, nope. Let's keep going. Rental and leasing services. Nobody there. Nobody's home. Security and protection. Geo Group. Security and protection services. That stock is moving pretty well. Doesn't have a lot of liquidity. I don't think it would be great for options, but I do think it would be a stock candidate. Let's put it on the list. Why not? Put it on the list. What do you think if there's any stock traders out there? Is this one that looked like you'd be willing to trade? Obviously not now. It's way overextended. Patience. If you love the trade, you set it free. If it comes back to you, it was meant to be. It's classic love story, if you ask me. What's next? Specialty business. I don't think we're going to find anything in here. Oh, I was wrong. Aramark. Oh yeah, Aramark. It's a grinder. It's kind of moving. They can be fickle, Sandy, right? We've noticed that industrials has that tendency to move into the fifth place position, move back out of that position. But sometimes it can really provide the market substance when the technology and the communication services goes into a consolidation. We'll see financials and industrials hold up. What was next? Where are we at? Machinery, staffing, and employment. Tools and accessories. Trucking. Lastly, waste management. Okay. Great. We searched 2 sectors. Took us 20 minutes. We comprehensively looked at every possible stock that meets what I would say are pretty discriminate criteria to get a seat at the table, right? To get a seat at our watch list. You can't just be any old stock. We don't just let them through the gates. So now what? Now we just put, I don't know, 10, 12, 14? How many? What do you estimate we did? What was a good number? We just added it. And now that watch list is that much stronger, that much easier for us to find a trades that might be a little bit off cycle with the rest of the market, giving us the ability to spread our risk out and get, right? We said we want to get our chips on the table, but I don't want all my chips in one hand. I want to be balanced in how I allocate my risk. I'm going to pause. Questions, comments, concerns. You can see, even as we went through our watch list, I've got 1, 2, 3, 4, 5, 6, 7, 8, 9. I have 9 stocks that are in setup. 10 if you add HWS, was it? HWM. And there was a second one that was kind of setting up on the list. So we add 12 or 14 to the list. We have 9 or 10 that are giving us potential setups. You're going to find this is what it looks like at any given time. It's just a different set of 9 or 10. Some are moving up, some are topping out, some are pulling back, some are setting up, some are triggering, and they all just kind of move through that cycle. Yeah. So I've had FinBiz and I'm an elite member, and I go, hey, Dan, all right. If you walk away with something, we call it a victory, for sure. Simple. It's funny because I'm not an elite member. I tell people I don't pay for it because I don't use it enough. It's just like stock charts that we use for our sector rotation and our major market analysis. I literally only use those charts those 2 times once a week. I literally only search like every other week. I run this and I do a couple of sectors. I just, yeah, but love it. Okay, so what do we have now for the rest of this week? We have 10 stocks that we're keying in on. Those 10 are my priority. After I manage my existing trades, that's always first priority, is always where you have skin in the game. Every trade should be managed. You should have a stop, a target, a time frame. You should know what you're looking for from the chart. What do you accept? What do you not accept? The more granular you are, perfect for the routine section, right, Dave? Absolutely. Love that comment. The more granular you are with those management instructions, the easier the management is, right? I don't want to manage trades by reacting to what happens. Oh gosh, this just happened. Now what? This should be, okay, if A, then I do this. If B, then I do this. If C, I do this. And then which one happens first? Then you do that. That's it. That's what we're doing here. We're just building these marching orders for the trades as we go. So we've built out our watch list a little bit more. We have 10 stocks in setups. That's tomorrow, Thursday. That's where the alerts will come from. So if anyone's like, hey, Scott, where do your alerts come from? It comes from our watch list. It doesn't need to come from somewhere else. It comes from our watch list. And when we have it, we're going to look to put the trades on and right? So that should hopefully help you build comfort that you were already thinking about it. That's already happened. Where someone was already thinking about the trade when the alert came out and they took the trade. They're already thinking about it. That's what I'm hoping for. But if it's help for the validation, if it's help, but remember, if I put an alert out and you already have 2 trades in that sector, I want you to take discretion to be like, oh, hey, Scott, I already knew that, but I'm not putting this one on because I already have risk in that area of the market. So the way that we're allocating risk should be ongoing, a very deliberate allocation. We just have a minute or 2 left. Any questions about anything we chatted about? I actually do feel like that was we kind of, it's a little bit more of an intermediate concept, searching and starting to build the context for your discretion as to what stocks you're willing to put on your watch list. And I want you to maintain, don't let your watch list. It's funny, I'll see platforms. They're like, you can have 25 watch lists with 50 stocks per. And I'm like, 1,250? I'm going to watch 1,250. Why would I do that? That's unnecessary. A quote of mine that I love from the late, great John Wooden. He said, do not mistake activity for achievement. Right? So just because you're doing something doesn't mean you're doing the right thing. Let's make sure that we are giving our process an evaluation to say, is this right? Can I pare it down? Can I make it faster, better, more efficient? This is part of what I talk about with that Kaizen philosophy we have of how do we do things better. Just marginal improvement here and there is all we're looking for, and things continue to improve. Okay, thank you, Dan. I appreciate it. I thought it was 2. It was a thank you. Thank you, David, for such a great representation of how a working session develops. All he asked about, I don't even remember what he asked about, to be perfectly honest. It just spirals into a rabbit hole, and we dive in that rabbit hole, and all of a sudden we're like, wow, we got some great stuff out of that. So there we go. So yeah, that's what happens. Just give me your questions and your observations, because they lead us to just kind of find these things that you didn't even know you wanted to ask about searching, but look where it took us. Anyways, amazing session, you guys. I appreciate your time. I appreciate your patience and your attention. Tomorrow morning, we're going to meet. Everybody who missed this session is going to just be a little disappointed that they did so when they look at the new stocks that we found and they learned how we found them. But I hope you can join me tomorrow as we do our midweek check-in. This is exactly where we should be. I like where the market is. I like what we're seeing. I think there's windows in front of us. Let's be ready. Have a great night. As always, everyone, happy trading.